Hey, welcome back. In today's video, we're going to talk about why are home prices still increasing when we have all-time record low for housing affordability, and also we have rates or average rates over 7% as well. Let's discuss. So again, this is from the Mortgage News Daily as of today, which is on Monday, April 29th. The average 30-year fixed rate is at 7.43%. As an increase of 84 basis points compared to 1 year ago. And here's a 1-year chart looking at rates. They have been at or above 6.5% for about 12 months now. But despite that, Redfin reported last week, I made a video about this. It says buying a home costs more than ever with prices hitting an all-time record high. That's looking at existing houses. Also on Monday, which is today, AltosResearch.com also reported that the national median home sold price also reached a new all-time record high at $398,000. That's a 2.4% increase from last week. And that surpasses the previous peak that was set back in 2022. Back then, we're at $395,000. So what the heck is going on? I'm going to share some trends we're seeing right now at the national level, but also provide some context regarding the California housing market as well as Florida to get some insights regarding why our home prices, or I should say the median sold price, why are we at all-time record highs? So here's a slideshow I pulled from the National Association of Realtors website, just looking at sales. So sales right now, the seasonally adjusted annualized rate is at 4,190,000. That's the most recent trends we have for the month of March this year. This is lower than last year, but also way lower compared to the craziness we saw in 2021 as well as 2022. Looking at prices, the median sold price, according to NAR, is at $393,500 for all housing types on a national level. That's an increase of about 5% on a year-over-year basis. And also, we're only down by about $20,000 from June 2022's peak at $413,800. One thing that's important to know here is that this is based on home prices for March, but Redfin's as well as AltosResearch.com's data covers the majority of April. So for example, according to Redfin, they looked at the 4 weeks ended April 21st, whereas NAR was only looking at March's data. Also, check this out. Here's the percent of sales for the month of March according to NAR by price range. So only 7% of all home sales in March on a national level were for over $1 million, and about 45% were in the range of $250,000 to $500,000. So it makes sense that the U.S. median sold price at $393,000, it makes sense the vast majority is in this price segment here. But here is where it gets really interesting. Here's the percent change in home sales by price range. So what do you guys see here? So sales for over $750,000 rose. So in the range of $750,000 to $1 million, that increased by 5%, whereas home sales for over $1 million surged by 14%. All other these price segments, though, decreased. So for example, $500,000 to $750,000, that fell by 1.2%. So for example, in the range of $500,000 to $750,000, that decreased by 1.2%. And of course, big decreases for these other more affordable price segments. So potentially what we're seeing here is because we're seeing more houses being listed for sale that far exceeds the US median sold price, that could be inflating overall the numbers on a national level. More luxury home sales on a national level. The National Association of Realtors also provided this as well. This is looking at the percent of change in home sales from 1 year ago. This covers existing houses for the month of March. Again, we're looking at the median sold price, $394,000, but an increase of 5% in the range of $750,000 to $1 million. And like I mentioned, a huge gain of $1 million home sales. All their price segments have been decreasing year over year. So that's overall for the US, but also for each of these 4 major regions, we're seeing similar scenarios, right? Northeast, $1 million home sales surging by nearly 18%. The Midwest increasing by 7.5%, which is right there. The South rising by 15.3%, and the West saw a gain of 13.1%. In contrast, for home sales for less than $250,000, all these major regions posted a decrease by more than 10%. Also in the range of $250,000 to $500,000, the only increase was actually in the Midwest, rising by only 1.8%, whereas the Northeast, the South, and the West all decreased. What also could be inflating the overall median sold price is also the gains in the range of $750,000 to $1 million. The biggest increase is actually in the Northeast, rising by 10.5%. Overall, though, it is important to note that the vast majority of all home sales in March were in the more affordable range, though, $250,000 to $500,000. That was at 45%. That was followed closely by in the range of $100,000 to $250,000, and also $500,000 to $750,000. But again, when talking about the increase in home prices up by about 5% year over year, we really have to look at the increase for these upper price segments. Let's also have a look at data from the California Association of Realtors. Then we'll look at Florida as well, looking at the mix in home sales to see where you kind of figure this all out. The California median sale price is at nearly $855,000, quite a bit higher compared to the national average. That's an increase of 7.7% compared to March of 2023. Here's a percent change in home sales by price range. And just like the National Association of Realtors reported, we're seeing big gains in the upper range. So in the range of $1 million to about $2 million, that increased by 6% from 12 months ago. And houses that sold for over $2 million this March, a giant increase of 20%, whereas home sales for less than $1 million all decrease for these price segments. In regards to the share of prices, or the share of sales by price segment, for the houses that sold for over $1 million, 1 year ago, 28% of all home sales in the month of March last year sold for over $1 million. This year, that share is at 34%. And again, that is significant given the fact that overall in California, we're at $855,000. So we're seeing a higher share of $1 million plus houses that are selling. And the California Association of Realtors also noted this as well. The mix of sales continues to support the median price growth. So look at what happened prior to the pandemic. Back in May 2019, let's look at this blue line first. These are houses that sold for less than $500,000, and the share there was around 45%. So back then, around 45% of all home sales in California sold for less than $500,000. In contrast, houses that sold for over $1 million was only 20% of all home sales. Now, fast forward to March, 33.7% of all houses in California that sold for over $1 million. And now we only have 25% selling for less than $500,000. So the mix in sales is helping increase the median home sold price. Also looking ahead in California, we also are seeing a big increase of pending home sales for over $750,000 as well. So for houses that are selling or in contract for over $2 million, that increased by approximately 40% from 12 months ago. The blue line, the solid blue line, are pending home sales in the range of $1 million to $2 million. That increased by about 25% or so. And houses that are in pending home sale status for $750,000 to $999,000, that increased by about 20%. But all other price segments are recording increases on a year-over-year basis, but not as high compared to this upper range. Actually, correction there, in the range of $300,000 to $399,000, pending home sales did decrease. But overall, for all these other price segments, they're not increasing as much in the upper range of the market. So looking ahead into April and May, we could see the mix in sales influence home prices overall. We'll have to look at that. Also, what's helping as well in California and also nationwide as well is due to the fact we're not seeing inventory absolutely skyrocketing, and we're still way below pre-pandemic levels. Here's a look at active listings. this year compared to the years past, going back to 2018. So even though active listing inventory is up by about 25% this March compared to March of 2022, we're still way below the levels we had back in 2020, 19, as well as 2018. So for example, back in 2018, we had around 45,000 houses for sale. Now we have around 25,000. On top of that, we're not seeing this giant run up in inventory like we saw in the spring home buying season in 2022. So even though we're up on a year-over-year basis, it's not skyrocketing as of yet this year compared to the huge gains we saw in the early part of 2022. So overall, limited inventory, historically speaking, is also keeping home prices supported as well. In addition, let's have a look at what's happening in Florida. And they provided a more in-depth analysis regarding closed home sales and inventory numbers by price range. So in the range of $50,000 to about $400,000, they saw a decrease by double digits from 1 year ago. And this, by the way, is for single-family houses in Florida from the Florida Realtors Association. So home sales in the range of $50,000 to $400,000, decreasing by double digits year over year. In contrast, for home sales that sold this March for over $1 million, it increased by 9.1%. What's remarkable about this is that in Florida, for the month of March, the median home sold price is at $421,000. So if we saw a 9.1% increase of $1 million plus home sales, that could likely impact overall prices in this March. So that was a look at closed home sales. Let's have a look at the number of new listings by price range. So in the range of $600,000 to nearly $1 million, a big increase of 14.8% compared to March of 2023. For new listings priced for over $1 million, giant increase of 15.8%, which is pretty crazy because that's the biggest year-over-year increase for all of these price segments. So for example, in the range of $150,000 to $200,000, that fell by 19.2%. So again, we're seeing a big increase of closed home sales in the upper range, but also new listings also increasing the most in the upper range as well. In regards to active inventory, or the amount of houses for sale by price range, here's a look at that as well. So the vast majority of inventory in Florida, at least for the month of March this year, is in the range of $400,000 to $600,000. That's an increase of 43.4% year over year. But in the range of $600,000 to nearly $1 million, that saw the biggest year-over-year increase, up by 49.0%. So not only are we seeing more new listings hit the market that are in the upper range, but overall, when looking at the amount of single-family houses for sale in Florida, we're seeing big increases in the upper range as well. What's also helping support home prices in Florida is a lack of distressed home sales, which of course is foreclosures and short sales. So for the month of March, there was over 23,000 regular home sales, only 159 foreclosures, and 27 short sales. So therefore, the vast majority, or about 99% of all home sales this March, were for a traditional home sale, and less than 1% were a distressed home sale. This is a common phenomenon we're seeing right now on a national level as well. This is a chart I pulled from ATTOM's or Adams' latest report regarding foreclosures. And of course, I made a video about that as well. So if you guys want to take a look at that, I posted it a couple of days ago. But here's a number, or a look at the number of completed foreclosures or REO properties. These are properties in which the lender foreclosed on the homeowner, and they did not sell that house at the courthouse steps through an auction. Instead, they became a real estate owned property and were sold as an REO. So in any case, looking at the number of foreclosures overall right now, I mean, it's been non-existent for about 4 years right now. And even though we have the moratoriums more or less being expired, except for VA buyers, I believe, we still have very, very low levels of completed foreclosures. especially when compared to 2010, when we had around 275,000, or actually just under 300,000 foreclosures. And right now we have 10,000. All right, changing gears again, let's talk about application numbers as well, a future indication of home buying demand and also home prices in the coming months. So here's the amount of purchase application growth by price tier. This is year-to-date 2024 compared to year-to-date 2023 this time. So for home sales or home prices over $1 million, that surged by 63.7%. For applications for home loans to buy houses in the range of $900,000 to $1 million, giant increase of about 47.6%. In the range of $800,000 to $900,000, a big increase of 22.3%. Going through this list here though, for home prices less than $700,000, only an increase of less than 10%. So for example, home loans for houses under the national median home sale price, only an increase of 3%. Also a small gain of 1.9% in the range of $200,000 to $300,000. So please comment below with your biggest takeaways from today's video. Mine really is that the mix in sales on a national level, also we're seeing in California and Florida, is likely impacting overall the median home sold price. If you guys want to get a gauge about what's happening in your neck of the woods, you really need to drill down into neighborhood specific data. In order to do that, you can go to Zillow, Realtor.com, Redfin, for example. It's a little bit tricky looking at the data, but if I was in your shoes looking to buy a house, if you want to see what's happening in your neck of the woods, I would look at, well, actually would contact a local real estate agent to provide MLS data looking at overall stats. But certainly I would say overall, just looking at the big picture here, the mix in sales is likely impacting the overall median home sale price, but also inventory and other factors are coming into play as well. But what's your biggest takeaway from today's video? Why do you guys think that we have all-time record highs for home sold prices on a national level? Please leave a comment below. I appreciate you guys watching today's video. Please like and subscribe, and we'll see you in the next video.